Check, check. 1, 2, 3. Can everybody hear me? Oh, cool. So you guys can hear me then. I'll be starting in 4 minutes. Check, check. Can you all hear me? All right, guys, this could be a big disaster. I am streaming to 6 different channels here. And it's quite a task because I use Restream to get most of those channels, but TradingView doesn't support the protocol that is being used. So I have to do that one separately. And anywho, let's get started. Hopefully you all can hear me. Let me just, I don't have a lot of viewers, and I'm actually happy about that right now because this could be a big disaster. Can one of you guys on TradingView let me know that you can hear me? Anthony, Scott, you guys are listening. Hang on one second. Okay, Scott's typing something here. It's not to me. All right. Well, let's just get started. Hopefully this is working. I didn't give anybody a lot of warning about this stream, only because, like I said, it could be a big disaster here. But I am going to test the streaming service for this week and this week's update. I'm gonna close this down because that's distracting, and we'll go. Okay, Anthony can hear me. Good. I think that was to me. All right, let's jump to the charts here. All right, so I'm just going to start out with, I spent so much time prepping for this stream that I didn't even get a chance to prepare my thoughts. But since I just recently opened another short trade on Ethereum, let's just talk about that. And those of you see my website there, those of you who follow me at my website, I'll let you know when I'm trading in most trades, and then you can use the spreadsheet that I make available to you all to know when I exit. Sometimes I adjust my stop limits, and so I'm exiting a trade before I actually, depending if I adjust my stop limit. Now this Ethereum trade, I have a short here, and my target is 1400. The reason I went into this short is because at the time we were below this 100-day moving average, and also a level of resistance I have above us at approximately right where our price is right now. Now that level comes all the way back from, I believe, February in 2020. Yeah, I started this all the way in February of 21. All right, so that's a big level. And we have not really confirmed any move above. You can see we have 2 candle bodies above it, but that is not confirmation. We need an open and close above that level for confirmation. Because we didn't have it, I felt safe going back into a short trade here. Now we are pushing up again close to my stop limit. I probably have my stop limit too tight. It looks like we're going to, my stop limit is at 1550. So I could get stopped out here on the fly. That's fine. I didn't want to risk a lot on this trade. Looks like I am going to hit that. But my target is 1400 on Ethereum. All right. Now, again, the reason why I went into this trade is because we were below this 100-day moving average here when I entered the trade. And I thought a safe play would be to, if we have a down day today, most likely we have a down weekend. Again, I am bullish midterm, but short term here, I'm thinking into the weekend we'll have a little bit of a drawback, a little bit of a bull flag here, which is forming on the daily before we head up further. So Ethereum is one of those I haven't got stopped out yet. If I take a look at my KuCoin portfolio, yeah, I'm still in this trade, and of course Bitcoin I'm doing nicely. I'm short on that as well. Jumping to, but this streaming stuff is taxing my CPU, so a little bit slow here, guys. I apologize. I don't even have the indicators come up on my chart. There they are. All right, so my target for Bitcoin is this 50-day moving average here, and that's right at around 19,600. All right, so those are my two short trades. Now, what I wanted to do today here on this stream, which I'm feeling very uncomfortable about because I did not prepare for my, just pulling up my dashboard here on Restream. Doesn't even look like, I'm feeling very uncomfortable about this because I don't know what you guys are seeing on your end. And I'm not really getting any feedback in the stream.io chat service yet. Though that could be because there's no viewers. And if there's no viewers, that's fine. All right, so what I wanted to do here, guys, is cover a few of the charts that I posted. Of course, last week I was out of the office, so I didn't do my weekly update. So it's been a couple weeks since I did an update here. And I want to just review some of the data that is coming in that I have been posting mainly to Twitter and sometimes to, well, mostly to my site and to Twitter, sometimes to TradingView. I think I have... guys, I should have tested this, and I apologize. It's really taxing my CPU and my GPU. Got both of them being utilized for these streams, but it just may not be enough. All right, so I posted this, what do you call it, Ichimoku Cloud. I really found this to be helpful when looking at history, and somebody else had posted a chart similar to this, but this is the Ichimoku Cloud. I've got it on 20-day, 60-day, 100-day, and 30-day intervals to provide these clouds. And you can see going years back, all the way to 2016, we had two touches here in 2016 on the S&P. Now, this is the S&P chart on the top side, and on the bottom side, I have Bitcoin. I thought I had lines going through here, but the point of this chart real quickly is that every time we touched the bottom of the cloud, we had a bounce. Now, I've been mentioning that we have been in a secular bull run since basically 2009. So you can go all the way back here to 2010, and that's when we crossed to the top side of this cloud. All right, and then so every time we get into this cloud, we tend to come into it and then bounce. And the reason why I thought this data was important is because here we are again up here, number 4. Let me see if I can get rid of this circle so you can see what we're looking at here. We touched exactly with one of these wicks the bottom of this cloud, and we are bouncing. This confirms my bias that we are going to enter into a bull market midterm. All right, this is going to go all the way through mid 2024, and I think that we are going to beat our previous high. We are at least going to match it. I pointed out in a previous video, which I don't know that I've got charted here, maybe on the US 500, but everything seems to be loading slowly right now with my Oops, that's not what I wanted to point out, but everything seems to be loading slowly here with my 6 streams going on and streaming to TradingView and everything. But the point I wanted to make, if I can get back to our chart here, let me jump over to this tab, and then I will pull up the US 500 because I think I've got it charted out there. It's either that or on the SPY. Gotta wait for everything to load. Yeah, guys, this is kind of a disaster because everything is so slow. So I've got Elliott wave here charted. We started way back here in 2018. We got wave number 1, came down in 2020. That was our March 2020 crash. That was number 2. Wave 3 tends to be longer and more extended. That brought us to our high on the S&P 500, where we topped out, and we have come down since then. And I've got these 2 levels of support here, these purple horizontal trend lines. That's the bottom of wave number 4. That's what I've been saying and thinking all along. And so far, it's looking like we have bounced a lot from those levels and are continuing to form these bull flags into an upward trajectory. All right. So we are, in my view, going to continue this run, and we are going to reach our previous high, if not exceed it. My projection is 5,000 to 6,000 on the S&P 500, which will form our last leg on the Elliott wave to get us to our target here. And there you can see, let me pull this down. So slow. I'm not going to do this again. Our target point, wave number 5, brings us to 5,000 to 6,000, and wave number 5 tends to be longer and more extended, and this is what I have been calling the blow off top. And I'm taking this data admittedly from other traders that I have been watching, as it seems to fit the narrative of the data that is incoming, and I believe will propel the market to insane prices. Remember, guys, it's really not as much about earnings reports as it is about liquidity in the market. And the reason why I think liquidity is going to come, actually, I just saw a news article this morning. BlackRock, which you know has got their hands in everything, is hinted at the fact that they are recommending the Fed start to introduce language that articulates more dovishness. And I've been saying all along that I do think a pause is coming soon. Let's take a look, with that being said, at another chart. I'm going to close this tab out that was reviewed. Leave page. All right, and the other chart, once it loads here, I'm burning up bandwidth data, CPU data, everything. All right, this is going to load here eventually, and this is another chart that I posted about a week and a half ago. There's all the data. All right, so kind of noisy. I want to walk through what I'm seeing here and why I think this is important as well. All right, so I have the housing market data mapped up here. Here in the green zones, you can see where the housing market is very strong. Obviously, when we get into the red zones, that is housing market weak, recession / crash. All right. And once we get into this weakening demand zone, that's where we get into trouble. All right. So I've provided here the last time, see these horizontal lines, that's the last time we entered into actually the housing market crash in 2006 through 2009. We entered into this weakening demand zone. The Fed did not correct for that immediately. In fact, you can see here, this orange line is the Fed rates. The Fed was still hiking rates as we were entering into this weakening demand zone, and in fact did not pause rates until 2 months after we were below the weakening demand zone. And then it was a full 14 months after the housing demand fell way below, far below the weakening demand zone, that the Fed started to ease rates. All right, so the Fed seems to be lagging in their action. And my question is that going to happen again this time around? You can see we've already dropped here. This is where we are. We're way below the weakening demand zone. So this housing market data is highly important for us to study and keep our eyes on. I also have here mapped the Dow Jones Industrial Average, and that's in the blue. And you can see that after the Fed paused rates here, 2 months after we entered the weakening demand zone, the Dow still had a ways to go. It didn't top out until 17 months after we entered that zone. So I'm thinking here, and the reason I post this chart is that I'm thinking history is going to repeat. Now, the Fed may be a little bit quicker than last time, but we're already a month behind. We're in this weak demand zone. We're already experiencing the start of a housing crash. Take a look down here at our RSI. This line correlates with our weakening demand zone. And look how oversold we already are. So if the Fed just simply pauses, which is already going to be a boost to the market, and another reason why I believe a blow-off top is coming, the market is going to take that and react to it very bullishly. Now, if the Fed is even more aggressive than they were over here, where they paused, and it was a full 14 months after till they began quantitative easing again, then we can really see that this blow-off top will last maybe even longer than I anticipate into 2024. And then that is, it's all this lag effect. That is when the real crisis begins. You know, we're going to suffer a recession. Already the housing market is telling us that, along with many other charts that I've pointed out numerous times in my past videos. So anyways, guys, if you want to take a closer look and study this chart, it's on my TradingView page. It's on my website, it's on my Twitter. I posted it many different places. I think it's very worthy of consideration. Okay, so it looks like I am starting to get people listening to me. All right, so good morning, everybody. Good morning, Alexander. All right, some of you guys are putting in requests for different chart analysis, and I will get to that at the end of the video here. We'll take a look at some of the different tickers. I apologize, guys, for this lag. I'm really going to have to upgrade. I thought this was a beefy enough computer to handle what I'm doing here. Apparently not. So we're getting a lot of lag. I'm just trying to work with it. One more chart here that I want to review here, and this chart is Bitcoin volatility as compared to the Dow. All right, so you can see bottom frame here. Every time this red line here, which is Bitcoin volatility, goes up, you know, we become more volatile. And then every time it goes down, Bitcoin becomes less volatile than the Dow, meaning that the Dow price action is actually more significant than what we see with Bitcoin. And that's, you know, you guys, we've been in a sideways basically since June. of this year on crypto, we have just gone sideways. All right. It's really hard to make any money as a trader. We traders like volatility. And if we don't have volatility, and you can see that from my $10,000 portfolio, it's basically just been flat. I've made a little bit money here. I've lost a little bit of money there. But just like the market, it has moved sideways and I've just been flat. All right. So I'm keeping my paid subscribers on pause until I start making money for you and along with you. All right. So let's talk about this chart here. So every time we move down to this basically 0-point line, for lack of a better expression, that's when Bitcoin really becomes volatile. Now, on my chart here, I don't have that mapped. I could go to my profile, but if you go to my TradingView profile, which I suppose I could do right now, but because the web is so slow, I'm not going to do that. But you can see all these horizontal lines. Once we touch that 0 point down here, that's when Bitcoin makes big moves. Now up here, the first time we touched this 0 point line in terms of volatility, we crashed significantly. And that was really the only time that we crashed. Our crash from the high to the low was approximately 50%. All right. And that was a big crash. Thereafter, every time we hit that 0 point line, we had a significant move up. Even here, this doesn't look like much, guys, but if I measure this out, if I map this out from the time we hit that 0 point line to our high, that's a full 30%. That's pretty significant. And I know crypto traders like a lot more than that, but look at this. When time number 3, when we hit that 0 point in terms of volatility being less than the Dow, look at what happened to Bitcoin. We went from basically 11,000 all the way up to our high, and that was almost a 500% move. All right. And so here we are. We've hit it recently again. That was the last spike a few weeks ago. Was a few months ago. Let's just jump over to Bitcoin real quick, and I can verify that for you. I'm shaking my head because of how I'm not used to doing everything this slow. Yeah, so that was back here in September. All right. So again, once we hit that 0 point line, that was time number 4. We spiked and we had, what was that move? That was about 15%. All right. So that's still significant, guys. Making 15% when basically the market has moved sideways since June is significant. And here, when I posted this chart about a week and a half ago, we had hit that 0 point again. And so probability says we go up, but that doesn't necessarily happen because so 25% of the time, basically, we have gone down. That was the first time. The remainder of the 3 times we went up. The question I pose is, are we going to have a big move up or a big move down at this point? So far, it's looking like we're going up, right? Could be a bull fake, a bull trap, all right? It could be a bull trap, but I'm thinking based upon the corroboration of data that I have been posting and talking about for the last few months, that this may be the start of our blow off top, all right? Now, I'm not saying we're not going to jump down one more time before we head up, but in any case, every time we have hit this 0 point line, guys, huge volatility has come. So the bet is on whether we move up or we move down significantly from here. All right, let me close out this chart, getting rid of as many charts as possible here because, or as many tabs as possible, because it does slow my, slows my stream down. Let me just make sure TradingView people, you guys are on too. All right, looks like it is, yeah, all right. Hi, TradingView people. Okay, so that's basically what I wanted to cover because I didn't do last week's video. I just wanted to make sure that, is my stream still going? Yeah, but for some reason it's locked on stream.io. I don't know, guys. I don't know if I'm going to do this again. All right. So those charts I wanted to cover for the sake of a review, historical review. Now, there's a few other things I have been talking about and mentioning, and that is in regards to, first of all, regional banks, which lead the S&P. All right, waiting for this chart here. The reason why I entered Bitcoin at 18,300 for a long is because I saw regional banks doing this breakout. Now, remember last time I did the video, it was about 2 weeks ago. I said we were heading up here and this is significant resistance. I didn't expect us to blow right through that. In fact, I thought we'd come right back down to this green trend line or below to this blue trend line. In fact, we even came lower. We came all the way down here to the 50-day moving average. All right, right back into our triangle here. All right, that I did not expect. However, that provided enough support for us. You can see we did not confirm any move below that line. All right, we needed, well, it was pretty close. If I zoom in here, it might be close to a confirmation. Yes, actually, it was a confirmation. So that was a bear trap. All right, and that's why I like to actually see 3 candles before I'm absolutely sure. And then look what happened after we closed and opened a candle below that 50-day, went right back up. Now regional banks are taking off again. And that doesn't surprise me because that is in line with all the data that I'm seeing. The banks lead us. Another one I want to look at is utilities. Utilities lead us. All right, and look at this. We came to a bottom here. Once my chart loads, you can see, okay, so I have big resistance right down here. We didn't quite reach that, but utilities and energy is taking off again. And let's see, I have a gas chart up here we can take a look at real quick. I don't want to bore you guys with all this stuff that I have been reviewing, but it's just proving that deflationary data is in. And so now this looks like a big old bear flag to me. Now we came back above this significant line of support, was resistance, and now is support again. The question remains, will we remain above that or will we break down below that again? All right, it all depends on what the market thinks the Fed will do, I believe. All right, because this is deflationary data that the Fed needs to consider. Now, if the Fed decides they're going to pause or even reverse pivot, this, energy prices and gas and oil and everything else will go up because the market is going to go up. So commodities will go up with that and lead that price action. Okay. Okay, so we had high yield corporate loans and industrial grade loans. I had put this chart out a few weeks ago, and at that time we were below this red line, which indicated that further downward trajectory was in store. But look at what's happened since then. We have broken out here. I've got high yield corporate loans over industrial grade loans. We have broke. That's just another indicator we can utilize along with regional banks and utilities, etc., to show us that we are going to have a blow off top. All right, so I'm covering all this data, guys, in the market. I know we're crypto traders here, because, and I think my chat stopped, or I think my video stopped. Alexander, looks like you're on and watching me. Can you let me know if the stream is still going wherever you're watching it? I think it looks like you're watching this on YouTube, but my stream here on Stream.io appears like it's locked up. So I don't know if you guys are getting this feed or not. All right, enough of the market stuff. The reason I cover this, guys, and the reason I go over what the market is going to do is, as you know, it spills over into our crypto space. All right, so if, oh, cool. Thank you, Alex. So if the market continues up, then as the market goes, crypto, I always say Bitcoin does 2x of what, let's say the NASDAQ does. All right. And then our altcoins do 2x of what Bitcoin does. So that's something that you guys want to prepare for the future. I'm not saying go all in yet. I certainly haven't done that. In fact, the two positions I'm in right now are short Ethereum and short Bitcoin. All right. Just because I expect a little bit of a pullback to retest those moving day averages before we continue up. And you can see here that correlates with what the S&P is doing. It has hit its head on the 50-day moving average, and that is currently acting as resistance. All right. So I think we could, over the weekend, have some drawback in the crypto. And so far, that projection has been correct. Doing well on Bitcoin, even though it's up 1% here. And so far, I'm still in the Ethereum trade. It's right there on the edge. Once it hits that 1550, I'll get stopped out. That's okay. I don't want to do too much risk here on the short side because you just don't know, right? I'm judging from what the S&P is going to do. And I believe we're going to hit this resistance here, the 50-day moving average, and come back down at least to our support at 3,800 before we continue further. Now, guys, all of this analysis is it's very contradictory to what a lot of the larger professionals are saying. All right. I'm going against the grain here. And I'm mainly doing so not just purely from a technical standpoint, but also from, talking some of the fundamentals. I posted a chart on Twitter about rent coming down. Now, rent is a lag indicator that is factored into the CPI index 6 months after the fact. Rent is way down. So that is going to really affect our inflation rate in about 3 or 4 months. Of course, the Fed will want to take credit for that with their increase in rates. But I don't know, that is so much the Fed increasing rates and drying up liquidity as much as it is the consumer sentiment. This consumer sentiment is at an all-time low here in the U.S. Due to various, the political situation in the U.S., the geopolitical situations worldwide. I mean, you've got, we're on the verge of nuclear war, which is something nobody wants to get into, except maybe if you really want to think malintent of the leaders, maybe they do. But, us people who appear to be fighting with each other probably would all be on the same page. We don't want nuclear war. But that is something that plays into the consumer sentiment being low. All right. Let me jump over here to my TradingView page so I can see the stream moving. All right. And VIX here, covering this again, guys, because I want to show you why I'm in the short trades. All right, so VIX has reached good support at the 200-day and the 100-day moving average. It came down all this time like I expected. All right, 2 weeks ago, I said we're going to come back down. We're going to hit this critical support here. I wasn't really sure whether that would hold us for a few more days or we would break right through it, and we broke right through it. All right, so that VIX coming down has a high correlation to why the S&P and why crypto is moving up. Additionally, I painted an M pattern here on the dollar. You guys can see that without me drawing it out, but I will just draw it out here quickly for you. All right, and that purple line is resistance since all the way back in 2009. I would zoom out like I normally do, except the charts are so slow here with all these streams going on. So I think the dollar will continue to come down. Now, right now it's bounced a little bit, and then we've got we're hitting resistance here on the 50-day moving average. All right. So again, these are all the things that I see. I think next week is going to be actually a bullish week, if I'm going to say it. I don't like to, say it, because if I'm wrong, I get lots of criticism for that. But that's just the way I see it, guys. That's it from all the data that I'm looking at. All right. So we are already quite a few minutes into this stream. Let me just jump into some of our crypto charts here, and then I'll jump over to my dashboard on Stream.io. I believe all the chat is still coming in, and I'll do some live charting for you there as well. All right, so Bitcoin, just a quick review. Guys, we broke to the upside of this long trending, once it loads here, descending wedge, which was a bullish wedge. I have a couple smaller wedges in here which played out perfectly. All right, this is a ascending wedge, which is bearish. This is a descending wedge, which was bullish that led us into our September pop. And we have another bullish wedge here that extends to the outside of this longer trending bullish wedge, which is why I am bullish Bitcoin. All right, we haven't, if we were to draw our target here, we haven't hit our target. Typically, the way you draw these targets is a trend line from the top of the triangle to the bottom, and then you move that over to where we break out. And it's showing, I mean, you could almost say that the 200-day moving average would actually be a good target. All right, so that's on the bullish side. Of course, you guys know I'm short. I'm only short because I'm waiting for us to come back down to this 50-day moving average. If we can do that, I re-enter long, and then I will hold this thing all the way to the 200-day moving average, and that would be some significant profit for us. And actually, the chart is showing that it's looking like that so far, right, guys? All right, so we broke out here, and what is this right here? This is a bull flag. All right. So this bull flag could extend all the way down to the 50-day moving average, which is what I'm obviously hoping for before we pop back up. Then all these levels along the way are very significant as well. All right, they're going to provide some resistance, and so at that point, guys, if you want to trade out, I wouldn't blame you. I would be everybody's a little bit shaky in this market. Not trusting of any price action because we haven't seen really anything with conviction in the market. Take a look at this all the way back here from our lows in June, which was 17,000. We have really just straight up moved sideways. I mean, that's all this. We've been range bound between our critical support here of 18,700 and 22,000. Yeah, and then with the exception of that September move out, to the upside of, or August move, I should say, to the upside of that 22,000, we've been range bound basically between 18,700 and 22,000, just gone straight sideways. So until we break that 22,000 mark, really, I have the level there drawn at 21,900. I'm not going to get overly bullish. Obviously, I'm leaning bullish at this point. Midterm, all right. Short term, I have my two, short trades down to our moving averages. All right, Bitcoin goes down to this 50-day. I'm hoping. All right, that's my short trade, and Ethereum, I'm hoping moves down to 1,400 once it loads here, which is right around the 50-day moving average as well. Just a little bit higher. I have a level drawn there. All right. have not got stopped out yet as far as I know. So still in that trade. Wait a second. Oh, got stopped out. All right. Got stopped out of that one. That's fine. I'll possibly look to re-enter once we get another candle, maybe over the weekend. And if you guys follow me at my website, you will see that trade come through. All right, now let's, enough rambling on here. I hope that the data is helpful to you guys. I hope you can see why I am biased and positioning myself for the move that I expect to be coming into the beginning of 2024 and through mid 2024. All right, this is just what I see, because the deflationary data, so it basically boils down to this. Deflationary data is coming in hot and heavy. The Fed has continued their rate hikes at a historical pace. Never before in history have we increased rates at the rate we currently are. I expect one more in November for 75 basis points. So does the market. That's already priced in. All right. And the other good thing is, being that 75 basis point rate hike is already priced in and we are still moving up, those supports held very well. That is a good sign. After that November date, I am wondering whether the Fed starts to articulate language that will give us clues and insights into the fact that they are going to begin to become more dovish. Maybe they pause and then they go from quantitative tightening, QT, to quantitative easing, QE. Now, that might not happen immediately, all right? As we saw in that chart I pulled up before, it didn't happen for a full 14 months until after the housing market had gone into a serious recession. We're already seeing signs of that in the housing market here in the U.S., in cities like Austin and in Arizona. We're seeing signs of that all over the place. So the Fed's going to have to consider that data. And being that they will consider that data, we're expecting the Fed to, intelligently digest that data and make reasonable decisions based upon that data. Then we are expecting that the Fed, or I am expecting that the Fed will at least pause after November. We get our 75 basis point rate hike again. And then December, pause, January, pause, and then possibly pivot, and because things are not looking good in the housing market. All right, let's do some tech analysis. I'll take your request on a few of these charts here. All right, somebody said BCH. Let's just take a look at BCH. All right, bear with me, guys. I'm going to have to figure out how to speed these charts up. I think I have some mapping done on the Coinbase chart here, so we'll pull up Bitcoin Cash and wait for things to load. All right, look at, there are a few levels popped in already below us. Again, it's looking like the rest of the charts, guys. This is just, we have just gone straight up sideways since June of this year. Now, the positive thing is it looks like this purple level I had drawn out here at 106. Where does that actually come from? Let me move back even further, because I usually take these levels from previous years. And yeah, you can see we had some pivots here on that level here in way back in February of 2019. There was a big pivot on that 106 level. And then further below, we had a pivot in December of 2018 on that bottom line of support. All right. So we have major support under us. Therefore, for a mid to longer term investment, if you wanted to start dollar cost averaging in here, you wouldn't be wrong. We have basically only gone sideways, and even that level below us has held up at 96.43. Then we have a super strong level at 78.75, which we have not even tried to touch. Very good sign. The downside is I see, our 50-day, 100-day, and our 200-day overhead. So if you wanted a safer bet, a safer trade, you might want to wait till we pop above that. I also see here, and I'm not going to draw out too much being that my chart is so slow here, but you can obviously see this wedge, that we are in. All right. So breaking, if you guys just draw that out on your chart and wait for confirmation, at least on the 4 hour if you're more aggressive, but preferably on the daily for a swing trade, which is generally what I do. Then you'll want to see another candle pop above this wedge and confirm. And that would also correlate with this area of confluence here, because look at this. The top of that wedge is also intersecting that 50-day moving average. So really, guys, to enter this trade and be at a safer level, I'd want to see us move above that 50-day moving average and outside of that wedge. All right, so that's what I see on BCH. And the price you're looking at there before you really start entering. So the 50-day right now is at 115. So you want to see it conquer that 115 price level thus far. And once it does that on the daily and you get a confirmation candle, I think that's a fairly good entry. If you really want to be safe, wait for it to conquer our 100-day moving average, all right? And have these moving averages on your charts, guys. These are very important. 100-day moving average is right now at 122.24. And actually, guys, that is a significant level as well. If I map that out, you can see right over here, we use that as support a couple of times. And that's, I bet you if I unhide the VPVR, it's right around that. Well, actually, the VPVR is at 113, all right? So 115 is significant. And then that level above at the 100-day moving average, right around 122, is also significant, BCH. All right, SLP. What is SLP? I don't know, but let's pull it up and see if we can figure something out here on SLP. Okay, so that is a stock. Is that a stock that you guys are wanting analyzed? Let me just see if it is actually a... Oh, Smooth Love Potion. So it's either a stock or, because I'm usually crypto, it's probably a Smooth Love Potion. Let's pull that one up. I love the name of that. Which one did I have? I thought I did some graphing on this one once. There's so many places that's offered. All right, we'll just go to Bitstamp. Pull that chart up. All right. Really, it's just a repeat of what I just did on Bitcoin Cash, right? I mean, sideways movement and all the crypto. Sideways movement, in this case, since May. The one thing I do spot immediately here, and let me see if I can increase this RSI. All right, see this, guys? We have bullish divergence indicated on the RSI. Look at that. All right, so that's a very good sign. Though, we're way up here right now. And so you could come back down to that support line on the RSI, which doesn't necessarily mean that this price is going to drop much more. It just means that the sentiment is not really going to be bullish until we come back down here and test, retest this support line. So again, just like Bitcoin Cash, you probably got a triangle here. Yes, you do. You've got levels here. You can map out these levels. We can just draw it out real quickly. And you can see there's good support right there. And we're right under that support, along with under the 50-day moving average. Don't want to enter this trade until you get above that 50-day moving average. Really, right now on most of these charts, guys, it's about that 50-day moving average. All right. You really want to see that level conquered for confirmation. Okay. That was for Maurice. Sorry, guys, that you're having to stick around with me for so long, rambling on about all this data. Aptos. Let's take a look at Aptos for Chad. I don't have my reading glasses on. All right. APT USD. All right. Let's take a look at the Coinbase chart here. Ooh, not enough data there. I can't do technical analysis on anything that has that little data. I wonder if maybe FTX. Nope. So that's relatively new, I'm assuming. I've heard a little bit about it recently, but Let's take a look at maybe which index would have more data. Nope. All right, so Aptos, guys, I don't have any fundamental analysis about Aptos, which is where I would jump to next if I didn't have the technical data. I would want to match what I see on the technicals with the fundamentals to some degree, though I mostly do technical analysis here. But I just don't have enough data on Aptos. Gate.io might have a little bit more. No. I mean, I really can't tell you much about this. There's just not enough data. I can't tell you. I mean, look at the RSI, doesn't even chart anything. I mean, this looks like a bull flag, but who the hell knows? No, yeah, you really can't chart these things. You're just taking a guess. You're just flipping a coin at this point. There's just not enough data here to support what the market psychology would tell us its interest is in this particular coin. So unfortunately, that one, there's just not enough data for me to chart and give you an accurate. Okay, Optimism. I know that one has been hot lately, right? Very hot. OP, USD. And I'm just wondering where I did most of my charting on this. I don't know if I did it on Coinbase. Well, we'll just take a look at this. We can chart on the fly. All right, so OP has been hot. Conquered that 50-day moving average. That's a good sign. 100-day is acting as resistance now. Careful there. However, this does look like a bull flag to me. All right. I don't know that I would enter here just because look at this RSI. All right. RSI is in overbought territory. I don't like entering any trade at that level. It's just it's too risky, guys, at that point. So for me, I would want to see it cool down. But again, you might be waiting a while. If you are a high-risk trader, maybe even with the RSI at the level it is, you want to get in. I would still wait for it to conquer that 100-day moving average. And the price there is 113 at the moment. Do I see anything else here? Well, yes, actually I do. So it looks like it broke to the outside of this wedge, which is why it took off like it did, right? All right. So we've got a wedge here, broke to the top side of that wedge. And if you wanted to map a target, you would draw your line from the top of that triangle to the bottom and then move that line over. And the target looks ridiculous. All right. $2.20 could happen. You've got a bull flag here. Again, really wouldn't want to enter this trade till I saw us get over that 100-day moving average. And really, I'd want to see this RSI calm down a little bit as well. It's really that simple, guys. I do depend a lot on the RSI. I found that as a reliable source for indicator for my trades. And for all of you who don't pay for the TradingView premium subscriptions, it's a free indicator. And it will always do you justice. I mean, so look at this indicator here. We're getting into overbought territory. You want to see us cool down. And additionally, like I always say, when you break out of major significant trend lines, like it looks like just happened here, you want to see the price come back down and kiss the top of that triangle before it takes off again. So that very much could happen. Again, shorter term, I am more on the bearish side. And I say shorter term, I mean through the weekend. But next week, if we don't continue down, I mean, next week I'm thinking we're going to have a bullish week. But I could be wrong about that. Some of the charts like this are showing me that we do have to come back down and kiss previous resistance goodbye before we take off further. Anything else here? Okay, I don't have anything. Most of these comments are coming from YouTube, so hopefully my other streams are getting this feed. I'm going to jump over to TradingView just to see if I have any questions over there. Okay, that's Twitter. No questions in live trading. I don't. Oh, because it says upcoming. Oops. Should have made that live. Shoot. That's why I'm not getting any questions from TradingView. See, this is all a learning experience, guys. This is the first time I have done this particular stream. Shoot. Well, yeah, I blew it this time. Knew it would be a disaster. All right, so I'm only getting comments coming in from YouTube. Let me just start this real quick. I know there's guys waiting on TradingView. Probably they're like, he said he was going to start at 9:30 a.m. and didn't start. So, yeah. All right. I'll jump back. I'll give TradingView people a little bit of time. There's probably quite a few that were chomping at the bit to ask me to do some technical analysis, and I missed it. All right, Mike. WFC rejected 200 SMA. BAC came close. My mic's in the way. Has pulled back. Think we're going to see a pullback to the 100-day before moving up. That's definitely possible. I mean, typically, so are you talking the 100-day on BAC or WFC? Let me just pull that up. But yes, I am expecting a little bit of a pullback because that's the reason why I'm in these short trades, which I got stopped out of, Ethereum and Bitcoin. All right, so yeah, pullback to the 100-day moving average very well could be possible. This is Wells Fargo. All right, let me just shrink my RSI thing down again. And I haven't done any charting on this, but again, banks lead the way out of any pullback, out of any recession, out of any depression, and they also lead the way into. All right, they're one of the key things that we've. Let me take a look at Credit Suisse, because I did do charting on this, and actually I put out this chart right here a couple weeks ago, calling a bottom when the wick of this candle hit our resistance. I'm going to zoom out here in just a second. On October 3rd. All right, I put out this chart on TradingView, which also went to Twitter, by the way. All right, so I'm zooming out here and I'm going to show you what I saw. See this descending wedge on Credit Suisse? I know they've been in the news lately because they were in trouble, right? But I quite frankly believe that they're going to be okay. And so when that wick hit the bottom of this red trend line here, which it's done once, twice, 3 times, and come on, this thing. Chart locked up on me. All right. Yeah, 3 times in the past. All right. I figured, okay, this is the 4th time. And now if we break those moving day averages, it's going to go up and at least hit the top side of this triangle. So that would correlate. Right now it's pulling back, and I think it's going to come down and touch that support one more time. So that would correlate, Mike, with WFC. And I know I got some charting done on Bank of America, BAC. So let's pull that one up real quick. And if banks do pull back, yeah, everything's going to pull back along with it. Yeah, and you can see that Bank of America is coming up here to the 200-day moving average, and which is nice support down here. The 50-day and the 100-day moving average are moving along together. So I definitely could see that pullback, definitely, over the next week. Maybe I should retract the fact that I think next week is going to be bullish. Maybe we don't get bullish until after this next 75 basis point rate hike is actually priced in the beginning of November. And you can see that Bank of America is getting hot here on the RSI. So once it touches that 200-day, we come up and touch that 200-day, I could definitely see it pull back to the 150-day moving average. All right, somebody has puts on the SPY. Huh. Okay, well, I mean, like I said, that's not a bad trade either, because we are hitting our heads on resistance right now. All right, I wouldn't count on us coming too much lower. at the very lowest, I would say 36.47. That's this first line of support, purple line of support, would be our maximum resistance. I don't expect it to come back down to 35.79 again. But as far as retraction, I don't even know if we'll get below this 3,800, to be honest. But yeah, puts is not a bad idea here, because we are coming up into multiple areas of resistance. The 100-day, which is coinciding with this ascending trend line, the 50-day moving average. All right, so I expect a pullback, which is why I'm short Ethereum and BTC. But I'm not going to go for long term on that pullback. And I don't know that I don't know that I have everything charted here. I think somebody had a channel going upwards, and you could draw that channel and possibly project the bottom where you would want your target if you had puts on this. So let me just draw a channel here real quick, which intersects this whole area of confluence. And so, depending on your time frame, you could say we come down somewhere in the middle here, and probably there is a line of support, a level of support that you could argue exists. In fact, I see one right here, a pivot right there. If I was doing a put call, I probably wouldn't go much more than that line of support there at 37.25. All right. TradingView people, I really apologize. I screwed this up for you guys. I have been live for the last hour and just realized I did not start the stream. The whole reason why I did the Stream.io service was so that I could incorporate my TradingView live stream into that as well, and just have a centralized repository of comments and streams. But I couldn't end up doing that because the protocol supported by Stream.io is not the same one that TradingView currently uses. Anyways, long story short, what happened, guys, on TradingView, and I do apologize for this, is that I started the stream and I've been running for about an hour now, and none of you were aware of it. So none of you got to ask any questions during that time frame. You can go to my website or to YouTube if you want to view the full stream. I'll try to be better next time. If I do this again, it is really bogging down my computer here, both the graphics card and the CPU. And so I'll have to upgrade my machine for sure if I'm going to do this again with 6 different streams going on and multitude of tabs open and OBS and preview screen, etc., etc. Okay, I think that's it for today, guys. Best of luck to you. Hopefully the data that I covered made sense and was helpful. And if so, give me a like and subscribe. Of course, most of you guys are subscribed, but give me a like just to let me know. Even put critical comments, guys, because I'm not opposed to somebody saying something critical to me. I don't get all butthurt about that. It helps me to make, if I don't know what I'm doing wrong, I can't know what I can do better, right? So positive, constructive comments are welcome, but so are negative comments pointing out things, areas that were rough, areas that I could do better. I already obviously know the video, it was lagging in this. I didn't start the TradingView stream. I did a lot of things wrong. In fact, you could call this whole first stream experience a disaster. I didn't advertise it. I didn't do that on purpose because I didn't want a lot of viewers, quite honestly, on this first time. I wanted to see how it would go, and it went okay, but I definitely can do much better. All right, so that's it for today, guys. Peace, y'all. Talk to you in the next stream or video.